Hey everyone, Intel is slated to report first quarter 2024 earnings results on April 25th, and since the stock price is down so much, investors are asking if Intel stock is a buy before it releases earnings. So I'll answer that question in this video. I'll also preview Intel's earnings. I'll highlight what I'm looking for from Intel coming out of its latest quarter, and I'll answer what I think about the earnings upcoming and if you should buy before, after, or not buy at all. So let's get right into this.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, I mentioned that Intel stock price is down significantly. In fact, it's down from close to $50 per share to begin 2024, and it's now at $34.40 per share, which is in contrast to the semiconductor industry overall, which is thriving on the back of growing artificial intelligence demand. So Intel has been a significant underperformer so far in 2024, and longer term, Intel has been an underperformer. So what's going on with Intel and why is this happening? Can it recover here? What to look for in its earnings release? So in its latest quarter, Intel said that their revenue came in at 15.4 billion, which was up 10% year over year. That's significant because for the full year, revenue of 54.2 billion was down 14% year over year. So while the full year was not good, the latest quarter started to show improvement. And management said that for 2024, they expect a rebound in the personal computing industry. That's going to be good news for Intel. They said they're expecting low single digits increase in the personal computing industry. Micron said they're expecting low to mid single digits in rebound in the personal computing industry. Regardless, the consensus is that the personal computing industry will grow in 2024 following a couple of years of declines. Remember, in 2020 and 2021, people bought a lot more computers than usual, and so they're digesting those computers purchased. It takes several years for someone to need to upgrade a computer, especially if they're using it lightly to check emails, to do homework, not professionally, where you might need to upgrade more often. Still, 2024 is going to be a recovery year. 2025 is going to be even stronger. Notably, those forecasts from Intel and Micron, they came several months ago or several weeks ago at least. The latest reports or the latest indication of the semiconductor industry demand came from ASML and Taiwan Semiconductor, which both indicated that the rebound in 2024 is not as strong as expected. So they both downgraded or at least decreased expectations from investors in terms of the semiconductor industry recovery in 2024. So it's going to be interesting to see when Intel reports its latest results, when Intel reports earnings, what they have to say, what they are seeing. Do they still think the PC industry is growing by low single digits? Or are they revising that number lower? Are they revising that number higher? That's going to be interesting. That's something I'm going to be paying close attention to when they report earnings. Now, they're forecasting first quarter 2024 revenue of 12.2 billion to 13.2 billion or 12.7 billion at the midpoint, and they're expecting first quarter EPS attributable to Intel of roughly 25-cent loss, negative 25 cents. So that's what Intel is forecasting for the next quarter. Now, for the full year, they say that in 2024, they remain relentlessly focused on achieving process and product leadership, continuing to build their external foundry business and at-scale global manufacturing, and executing our mission to bring AI everywhere as we drive long-term value for stakeholders. Now, Intel's expansion in foundry and manufacturing is supported by government incentives, billions of dollars of which they're slated to receive for that expansion. The CFO adding to that statement saying that they continue to drive operational efficiencies in the fourth quarter and comfortably achieve their commitment to deliver $3 billion in cost savings in 2023. Notably, they expect to unlock further efficiencies in 2024 and beyond. So while they found $3 billion in cost savings in 2023, they feel there is more to add to those cost savings in 2024 and beyond. I want to hear more about that when they report earnings in the upcoming quarter. It's rare in my several years and decades of investing where I see a company both in expansion mode, adding manufacturing, adding different lines of business, and at the same time finding cost efficiencies. Usually these happen at different times in a company's growth phases, right? Usually, when they're in growth mode and they're looking to add manufacturing and they're looking to add new lines of business, they're not simultaneously looking to find efficiencies. Efficiency improvements typically happen after growth periods where they've made those investments and then those investments led to growth for several years, and then that growth is starting to slow down, and then after those several years of growth, management takes a look at the business and sees, oh, maybe we added too many people, maybe we added too much office space, maybe we added too much manufacturing capacity, and then they look to right size the business after the growth. I haven't seen this very often where they're simultaneously growing, adding manufacturing, adding new lines of business, and unlocking efficiency. So this is a higher degree of difficulty task to accomplish both of these at the same time. So I'm looking at this as a higher degree of difficulty, a higher risk endeavor, but nevertheless I'm paying attention to this closely, seeing the progress Intel makes and what they have to say about it in the next earnings release. Now, Wall Street expects Intel to deliver 13 cents in earnings per share in the current quarter. That's down from 33 cents they expected just 90 days ago. So Wall Street has downgraded their expectations for what they expect from Intel in the current quarter. However, over the next several years, Wall Street is very optimistic about Intel's growth prospects. From 2024, they expect $1.26 in EPS for the full year, and then $2.09 for the year after. For the next 5 years, analysts on Wall Street expect Intel to deliver 40% earnings per share growth for each year over the next 5 years. Those robust earnings per share forecasts are what have me recommending Intel stock as a buy. I had Intel stock rated as a buy since April 3rd, probably since before that. I updated it most recently on April 3rd, as you can see here. That's my latest update recommending Intel stock as a buy. That recommendation has not worked well. As I showed you in the video earlier in the video, Intel stock price is down considerably for the year and for the month, to be sure. Now, is Intel stock a buy going into the earnings report? I still have the stock rated as a buy, as I show you here. Going into the earnings report, I'm not downgrading the stock. However, it is always riskier to buy a stock right before earnings come out because the stock price is more volatile surrounding the earnings release. If you want to lower your risk, you can buy the stock after earnings come out. That way, all the information is incorporated into the stock price, and then you can buy it afterwards. Or if you're afraid of missing out on a pop because of something positive in the earnings release or a better than expected earnings release, what you could do is split your purchase allocation in 2 or in 3 and buy a little bit before earnings come out and buy a little bit after earnings come out. That way you decrease the risk of both occasions, right? You decrease the risk that you pay too much and you decrease the risk that you miss out. So I'm reiterating my buy recommendation for Intel stock. Now, I will highlight it's not my favorite stock to buy. I don't have it rated as a top stock or a top, one of my favorite stocks. It's just one that I feel the risk versus reward is worthwhile at its current valuations, which is trading at a forward PE of 14.98, the lowest you've been able to buy the stock all year. So I just think the risk versus reward is worthwhile. The growth expectations are excellent. And so based on those, I have the stock rated as a buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.